Welcome back to Cover Your Assets, and I'm Kelly Guest. We've got Craig Nestor, Todd Rooker, and Jason Walgrave all around the table today talking all things financial tactics for the 21st century. And today's topic, everybody, is biblical proportions.
And we're not talking about just at the buffet table.
No. We are talking about snapshots from Todd Rooker's free book that you can download at coveryourassets21.com. So Todd, talk to us a little bit. There's some great action-packed info in your book, but talk a little bit about how doing the right thing might not always be the best thing and how in the heck you go about finding that out.
Well, it is pretty tough to find out because I think most people assume that if I do the so-called right thing and pay my bills to the best of my ability, even if that means that I'm making payments, meaning a percentage of what is actually owed, but I can make a payment, just not the whole payment, or I can settle the debt, not all of the debt, but I'm willing to liquidate all of the money from my retirement account and I can pay you 40 cents on the dollar. People tend to believe that they'll be rewarded for that in terms of their credit, when in fact it's ironic. Sadly, you may actually be able to recover in a fraction of the time from a bankruptcy as opposed to doing that. Now, that certainly is not to say that a person shouldn't try to pay their bills, and God forbid somebody should actually think that's what I mean. But the idea that paying the bills or settling the accounts necessarily is the best thing in terms of your credit and recovery afterwards oftentimes may not actually be the case.
And sometimes with the mortgage companies, it's the worst thing to do. I mean, they're really not going to work with you if you're current.
That is such a mind-numbing concept to most people, Craig.
People who are current are actually the solution to the problem. They're the ones that are actually paying for everyone who's not. And so doing the right thing. And
that's a little frustrating.
Doing the right thing, exhausting your resources, thinking that you're making a difference on the other side is I think the trap, because they really don't care on the other side. They're really just taking the money. You're not creating a goodwill relationship with them. Your loan is long gone. The person you're actually talking to is not your mortgage company. They are a servicer. Their client is the investor. You're not a client of theirs. They are a collection agency. Be careful. I mean, they are the most high-powered collection agencies on earth.
So what is the right thing, and who defines the right thing? I think that we're so conditioned by the banks and media, and have been for such a long time that, you know what, maybe you need to step back and sit down and talk to Todd and take a look at what's the right thing for my family.
What's the right thing for my family? That's the right thing.
Well, it's interesting because when you talk about, I just want to do the right thing. I call up the bank. I am a solid, stable person, never missed a payment in my life, but I see the rocks coming at me. I'm exhausting my resources to try to make my payments. So I call up in desperation to talk to the mortgage company, and I say, listen, I'm not going to be able to make my mortgage payments very soon. I need you to modify my loan so that I can actually make those payments and stay in my home. And they're on the, teary-eyed on the other end of the phone. And the mortgage company, I don't think it's necessarily mean-spirited. I think it's just a very benign approach, which is to say, look, we're in the business of making money, and you're telling us you can't make your mortgage payments, but guess what? You are. And so until you stop making the mortgage payments, we have nothing to say. And the fact that you may have to liquidate your retirement account and your kid's college education is of no consequence to us, because at the end of the day, you owe the money. So pay the money. And when you can't make the payments any longer, then we'll talk.
Well, then we'll take your house.
Well, then there you go.
Craig, you kind of come in at that point. That is an entree where people will often get in touch with you, where they're sitting here going, I don't know what to do, but I'm feeling myself slipping. Tell us about your role.
Well, the question I get most often is, Craig, do I make my next payment? And that's when we have to look at cash or credit, because we are conditioned to exhaust our cash to save our credit. Mm-hmm. And we have to look if that's really what we should be doing now. Should we be spending our money on something that will only delay the inevitable? If that's the case, we really have to be careful. So the first question, cash or credit?
Meaning that if the impact to my credit is worth more than having to pay all the money. I mean, if I got $90,000 in debt and, hey, man, I really love my credit, it means a lot to me. And I say, really, is it worth $90,000 over the next 2 years? And look, I'm a credit expert. Bottom line, I understand credit probably better than most people you're ever going to meet. But the reality is, when it comes down to the pure cost of money and credit, most people are going to say, sorry, I really appreciate my great credit. I've worked hard to have it. But you know what? If it comes down to that amount of money, I don't have that amount of money. So I guess my credit's going to suffer. And don't forget, at the end of the day, when you have to make a decision of whether or not I feed my kids or let my credit go bad, that'll take you about a millisecond to make that decision.
Well, your credit rating doesn't put food on the table. It doesn't doesn't pay your car insurance. It doesn't help your kids' tuition. Your credit rating doesn't do that. It's really for houses and cars. And I know that, I don't want to get off in an area where I have an opinion on it, but we have to be real careful.
Oh, yes.
We just have to be real careful with the cash or credit conversation, because it's going to end up that you're going to pay a tough price. And if you're going to pay a tough price, we have to make sure that you reap all the benefits of that tough price. And a lot of times we can save those dollars. We can save our dry powder so you can have a soft landing down the road.
People need to understand that they can recover from some credit nicks. And Todd, the question you just brought up was, is it worth $90,000 over the next 2 years? Because most cases, whether it's a bankruptcy or foreclosure or a short sale rather, 2 to 3 years you can be in a position where you can buy again. So 2 to 3 years of not perfect credit or pay it now. What do you want to do?
I've got clients who have $100 million in deficient debt. Now, I don't mean $100 million in loans. I mean, after the properties are sold, there's $100 million in deficient debt. There's 14 hotels, there's 3 strip malls, and there's 25 residential properties, and they're all in foreclosure. If I can bring that person back in terms of credit, trust me, I can bring back most people. So there really is nothing that is insurmountable when it comes to credit. You can overcome these issues. But of course, if you have this silly notion that you're going to stop operating with credit in the future and simply pay your bills on time and your credit's going to come screaming back, you're sorely mistaken as it relates to that. There is strategies and you got to know what you're doing. But the point is, there's nothing that is insurmountable. And I also want to say one other thing. We don't ever tell people to stop making their payments. If you're looking for somebody to take responsibility and tell you to stop making your payments, you're not going to find it here. The legal liability associated with that is utterly overwhelming, and anybody who doesn't, frankly, needs to have their head examined. But what we will do is present to you the options and the implications so that you have the information to make that decision on your own and feel confident in the decision you make for your family.
And in just a couple minutes that we have left here on this week's edition of Cover Your Assets, what I'd like for you guys to do is just give a sort of a scenario, a description of the type of person who should consider calling each one of you this coming week.
Well, I think when you're talking about short sales, there's a lot of, you hear a lot of stories out there and, that they don't get done or they can't get done. I have clients that come to me where I'll give an example of one, 2 cousins that purchased a house in the northwestern suburbs. They didn't have really any financial hardship whatsoever. But when they bought the house, they were single. It's a 2-bedroom, 1-bathroom house. In the meantime, over the 2 or 3 year period, they both got engaged. They're both getting married. Now, it is unreasonable to expect 2 married couples to live in a 2-bedroom, 1-bath house. That is the hardship, and we got
well,
that.
Not from the bank's perspective.
Actually, it was, Todd, and we did get that negotiated, a satisfaction on the first and the second, for the reason that you can't expect 2 married couples to live under one roof. So my point is that regardless of whether or not you think you can't get it done, you simply give us a call. Tell us your situation. We'll explore your options and show you what you can do.
And I would say that you got to do everything with a plan. And the best part about Craig Nestor, Todd Rooker, and Jason Walgrave here at the Cover Your Assets table is that they're going to bring in the other experts, I should say, to give you the advice, the unbiased advice that's going to fuel these really huge, life-changing opinions. Right, Craig?
This is the most unforgiving economy in our lifetime, and it's really not getting much better. But what we see is that Americans are getting smarter, and we're getting stronger. We're spending more times with our families. We're making better decisions. It's a new now, and we have the blueprint that can navigate a family to a better spot.
And that's what we do here on Cover Your Assets. Reach us all week long, 855-835-8500. That's 855-835-8500. And don't forget to log on to coveryourassets21.com and get your own free copy of the Financial Crisis Bible. Have a great week, everybody.